Brad Williams, Frugal Finance. Let's talk a little bit about self-employed pension plans. And because there's always misinformation on the internet, why don't we go directly to the source? Why don't we go to the IRS? And I'm going to provide a link to this, but here's an overview of simplified employee pension plans. This is focused primarily on self-employed and self-employed with employees. And it's a nifty little plan, huge contributions if you are self-employed, if you're a contractor, for example, or if you're a consultant, you're doing this on your own, you can contribute up to a substantial amount of money. But why don't we go over this? And there are just countless number of retirement plans. I strongly encourage you to contribute what you can on an annual basis. Why? Well, it's a huge tax benefit and retirement. We kind of just brush it off, take it for granted, but you can't do that any longer. Your requirements, given that this is the end of 2024, the cost of living, and who knows what the future holds in terms of inflation. But you're going to need a sizable retirement, $1.5 million, so they say, to live comfortably. And if you're 30 years old now, in 35 or 40 years, can you imagine what inflation is going to look like? But that being said, here's a quick overview. I'm just going to parse over this. I'm not going to cover every detail. Again, there'll be a link here. But here, we're just going to cover choose a plan, establish a plan, participate in a plan, operate and maintain a SEP, correct SEP plan errors. We're not going to touch on that. You can do that on your own. How to terminate and additional resources. Choosing a SEP plan, it's called a self-employee pension plan. It provides a significant source of income at retirement while allowing employers to set up aside money in retirement accounts for themselves and their employees. Now, if you don't have employees, guess what? You can just focus it on your own. I have a SEP plan. I've had one for 1 million years, and it works great. But here, there's some other factors that you need to take into consideration. A SEP does not have the startup and operating costs of a conventional retirement plans. If you have an ERISA type 401k kind of deal, it's sizable. You're going to have to bring in an administrator. It can gobble up a significant amount of cost. So that being said, available to any size business, easily established by adopting this form, a SEP prototype, or an individual design plan document. If this form is used, cannot have any other retirement plan except another SEP. You can't pile these up. And the reason being as well, you can just see the huge conflict. And again, the IRS is implementing these plans, and it's a great plan. Strongly encourage you to do it. How does it work? Well, let's say Jed works for this RV company, and RV decides to establish a SEP for its employees. Rambling has a SEP because the RV industry is cyclical in nature. With good times and down times, in good years, this RV group can contribute larger amounts to its employees. In down times, it doesn't have to contribute at all. And that's the great benefit of these deals. Rambling's contribution rates, whether large or small, must be, and here's the caveat, it has to cover all employees. Clearly, if you're an independent contractor, you can see the benefit right off the bat. If you have a small 5 to 8 employee kind of deal or less, this could be beneficial. The financial institutions that Rambling has chosen for its SEP has several investment funds. Here, you can look at something like Schwab or Fidelity or any of the other, Vanguard. They're going to have a SEP capability, and then from there, you can choose the options. That's where you're going to have to do a little bit of research as to who has the best options. You can buy your own stocks within a SEP IRA. You don't have to follow their particular guideline here about investment funds. You can buy individual stocks. You can buy index funds, so on and so forth, mutual funds. Pros and cons: easy to set up, low admin costs, flexible. Who contributes? Employer contributions only. There's no matching here. Contribution limits, total contributions to each employee SEP IRA are limited. Filing requirements: an employer generally has no filing requirements. Again, that's a huge benefit. Participation loans, not permitted. In-service withdrawals, yes, but there's going to be a huge penalty. Again, it's just like any retirement requirement or any contribution. If you elect to take an early withdrawal, the IRS is going to ding you. How to establish a plan? The first action you'll need to take is to choose a financial institution as a trustee of the SEP IRA. It's not a big deal. You just appoint this, and you can move it from financial institution. You can roll it over into an IRA if you need to at some point in time. Setup. There are 3 steps. Execute a written agreement to provide benefits to all eligible employees. If you're self-employed by yourself, you don't have to worry about this. Give employees certain information about the agreement and then set up an IRA account for each employee. Written agreement. The written agreement must include the name of the employer, the requirements for employee participation, the signatures of a responsible official, and an allocation formula. Now, this is pretty much pro forma. You can get all this stuff from a specific financial institution, or you can go to the IRS and you can look at their templates. You may not use this form if you maintain any other qualified plans except another SEP. A plan is maintained even if no contributions were made during the year. Use the services of leased employees, want a plan year other than the calendar year, or want an allocation formula that takes into account Social Security contributions you made for your employees. If you can't use the Form 535 SEP, you may use a prototype document. A mutual fund, insurance company, bank, or other qualified institution may provide these, as I just stated, providing information to participants. You must furnish your eligible employees notice that you have adopted the SEP, requirements for receiving an allocation, and the basis on which the employer contributions will be allocated. Contributions, that'll be a different video. Up here, it'll say contributions. You can contribute up to, if you're self-employed, sole kind of deal, you can contribute $69,000. Yeah, 69 grand. That's a serious contribution. Or there's some other formulas. 340,000 max gross income. Then they use a 25% formula or a max of 69 grand. If you're making a couple million a year, you can only contribute 69 grand. And you can't throw that into any other plan, but this is a great option. If you have multiple employees, there'll be a matching requirement that you will have to follow. And again, it's pretty pro forma. When I say pro forma, it's you just dot the I's and cross the T's. It's really not that tough. Other than that, if you need it, read it. Again, I'll leave a link to this below. If you have any follow-up questions, just let me know. Again, this is just a brief introduction. I'll have a lot more to say about these SEP IRA plans and contributions. See right here, total contributions. That would take too much time here. But that's just a brief introduction. Brad Williams, Frugal Finance. See you soon.